Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what in the world is going on inside these massive company filings. Hold on to your hats, folks, because today we are diving into Exicure Incorporated as proxy statement. And let's just say there is some interesting stuff going on behind the scenes. So what exactly is a proxy statement, you ask? Think of it as the Company S annual report card, but instead of grades, it is full of important information about upcoming shareholder meetings, who is running the show, and how the company is spending its money. And this one is for the 2025 annual meeting. I'll break down who is in charge, what they re-voting on, and of course, the juicy financial details. Before we jump in, if you get value from these straightforward breakdowns direct from company documents, make sure you are subscribed. And hey, we've got a Discord community for deeper talks. It is linked in the description below. Right now, we are looking at the general information about the company and the upcoming meeting. They are holding their annual meeting virtually, which is pretty common these days. The meeting is scheduled for the 6th of November 2025, and the record date for who gets to vote is the 9th of September 2025. That means if you own shares on that day, you get a say in how things are run. They re-asking shareholders to vote on a few key things, like electing directors, approving their auditor, and a super important one, the say on pay proposal. This document itself is a Def 14A filing. It is basically the official report they file when they re-asking for your vote as a shareholder. It is a standard form, but it contains the specifics for Exicure Incorporated. And here we see that this is the definitive proxy statement. That means it is the final version for shareholders, not a preliminary one. This is for Exicure Incorporated. If you haven't heard of them, they're in the biotechnology space, specifically focusing on RNA-based therapeutics. They've been through some changes, and this filing gives us a glimpse into their current structure and future plans. So this notice is pretty straightforward. It is the official announcement for their 2025 annual meeting of stockholders. It tells you when and where the meeting will be held, which is virtually, of course, and what business will be conducted. The key items are electing directors, ratifying their auditor, and the ever-controversial say on pay proposal. They also mentioning that they want to provide access and the ability to ask questions. It sounds like they are trying to make the virtual meeting engaging. First up, they are looking to elect 2 directors. These directors will serve until 2028, which is a pretty standard 3-year term. This is crucial because directors are the ones who oversee the company S strategy and management. Next, they want to ratify their choice of auditor, CBIZ LLP. This is basically a stamp of approval from shareholders on the company's independent accounting firm. It is important for transparency and trust that shareholders have confidence in who is vetting the financial statements. And the big one, the say on pay proposal. This is where shareholders get to vote on whether they approve the compensation packages for the top executives. It is advisory, meaning the board doesn't legally have to follow it, but it is a strong signal of shareholder sentiment. As we mentioned, the record date is the 9th of September 2025. This is the cutoff for determining who gets to vote. And they're really emphasizing how important your vote is. They want to make sure as many shares as possible are represented even if you can't attend the virtual meeting. Makes sense when you're asking for approval on major decisions. This signature tells us that Andy Yu, the CEO and president, is acting on behalf of the board of directors. This is pretty standard for these kinds of documents. Now we're getting into the nuts and bolts of how this all works. They're providing a Q&A to explain everything clearly. They explain why they're going virtual. They say it's to enhance stockholder access and participation. It's definitely a trend driven by cost savings and accessibility, but they want to assure everyone that it doesn't limit your rights as a shareholder. To attend virtually, you need a special 16-digit control number. This is that unique identifier that proves you are a shareholder eligible to participate. So if you usually get your mail from a broker, make sure you check those instructions for this number. Here they list out the proposals again. Director election proposal, auditor ratification proposal, and the say on pay proposal. Pretty clear what they are asking for. And importantly, their board of directors is recommending a for vote on all these proposals. They want you to vote for the director nominees for the auditor and for the executive compensation. This reiterates the record date and who is eligible to vote. This is a really important point for stockholders of record. If you don't vote, your shares won't be counted. And if you return a proxy card without specific instructions, they will vote your shares for the proposals listed. So it's definitely best to be intentional with your vote. For those who hold shares through a broker or bank, this section is for you. If you don't give instructions, your broker might not be able to vote your shares, especially on matters like director elections and executive compensation, because those are considered non-routine. This is a critical detail. If you want your voice heard on these issues, you must instruct your broker. This explains how directors get elected. It is by a plurality, which means the nominees with the most votes win. Since the directors are running uncontested here, it essentially means they just need one vote to be elected if a quorum is present. The board is strongly recommending a vote for the director nominees. Let's take a look at the nominees. Ajin Huang has experience in asset management and has worked in content planning, and Sangjin Yo, who leads a math tutor academy and is involved in asset management. The board believes their experiences qualify them to serve. Now let's talk about the auditor, CBIZ LLP. They being proposed again for the fiscal year ending the 31st of December 2025. They been working with Exicure since June 2023. Here are the fees. For the year ended the 31st of December 2024, audit fees were $236,520. This is a significant decrease from 2023, where the audit fees were $432,846. This drop could mean a few things, possibly less complex audits in 2024, or perhaps a change in the scope of services. It is good that the fees are going down, but we want to see the auditor. Explanation for that. On to the on-pay proposal. Since they no longer qualify as an emerging growth company, they now have to have this advisory vote on executive compensation. This is the resolution you'll be voting on, essentially asking if you approve the disclosed executive compensation. This section shows who owns the company's stock. It is broken down by major shareholders and management. Exicure Hytron Incorporated is the largest shareholder with a whopping 52.8% of the shares. That is a controlling stake. And interestingly, Andy Yu, the CEO, directly owns the same amount as Hytron. This indicates a very strong alignment between the CEO and this major shareholder, likely meaning he has significant influence. This part details transactions between the company and its executives or major shareholders. It is important for spotting potential conflicts of interest. They had a few common stock purchase agreements. One notable one from November 2024 with Hytron Inc., where the company issued shares at $3 per share. Then another in December 2024, also issuing shares to Hytron at $3 per share. The fact that shares are being issued at a fixed price like this can sometimes signal the company is seeking capital injections. They also have a consulting agreement with entities controlled by Paul Kang. They paid $218,000 in 2023 for business development consulting services. This is something to keep an eye on, ensuring these consulting fees are providing value. This section talks about the board structure and how they govern the company. Some directors are deemed independent according to NASDAQ standards. However, after a stock purchase agreement, they became a controlled company, which means they are exempt from certain independence requirements for their board and committees. This is a significant governance point. The audit committee has a lot of responsibilities, including appointing the auditor and making sure they are independent. This table shows how much directors are paid. Dongo Lee received a director fee of $20,000 for 2024. Most directors are getting a flat annual retainer of $20,000 paid quarterly. It's worth noting that no directors received equity grants, which is interesting given the industry. Time for the executive compensation breakdown. This is where we see what the top brass is making. This is the main table for executive pay. Andy Yu, the current CEO, had a salary of $25,000 in 2024. This seems quite low for a CEO, but then again we see a note saying he was appointed CEO in December 2024. This salary is likely prorated for a short period or reflects a base during a transition. Paul Kang, the former CEO, received a salary of $150,000 in 2024 and $50,000 in 2023. It seems he was compensated more substantially during his tenure as CEO in 2024 before the transition. Songik Baik, the current CFO, had a very small salary of $3,611 in 2024, likely due to also being appointed in late 2024. Jiong Huang, the former CFO, received $150,000 in 2024 and $49,432 in 2023. All other compensation, $2,167 for Andy Yu and Song Ikik Baik in 2024. This likely represents director fees they received before officially taking up their executive roles or for overlapping duties. They also detail employment agreements. Andy Yu S agreement from December 2024 started with a $300,000 annual base salary, which was later increased to $480,000 effective April 2025. Songa Bike, S agreement from December 2024 also started with a $130,000 salary and was adjusted to $300,000 effective April 2025. This shows a significant step up in compensation for the current leadership as they officially take on their roles and the company moves forward. This table shows the equity plans. There are 2,631 options outstanding with a weighted average exercise price of $27.55 and 134,094 shares remaining available for future issuance. Not a huge number of options outstanding given the company S stage. This is a critical part of any proxy statement. It compares the actual compensation paid to executives against the company's stock performance and net income. For 2024, the summary compensation table total for the current CEO Andy Yu was $27,167. This reflects his partial year as CEO at a lower initial salary. The former CEO Paul Kang received $170,000 in 2024. The average for non-principal executive officers named executive officers was $87,889. This is fascinating. A $100 investment in the company, S stock at the end of 2021 would be worth $53.27 by the end of 2024. This indicates a significant decline in shareholder value over that period, even with a slight recovery in the stock price by late 2024. And their net loss for 2024 was $9.7 million. That is a substantial improvement from a $16.9 million net loss in 2023. So financially, they are moving in the right direction by reducing losses. They highlight that compensation actually paid to former CEOs and non-PO executives decreased from 2024 to 2023. They attribute the stock price increase in late 2024 to common stock purchase agreements. The report mentions there is no relationship between the stock price increase and the compensation decrease, and that the current CEO and immediate former CEO received fixed salaries, which bear no relation to TSR, which suggests their pay isn't directly tied to short-term stock performance. This report from the Audit Committee is essentially their sign-off and recommendation for the financial statements. The Audit Committee reviewed and discussed the 2024 audited financial statements with management and the independent auditors CBIZ LLP. They are recommending these statements for inclusion in the 10-K filing. This section outlines the deadlines and procedures for submitting any shareholder proposals for the next year's meeting. It is good information for any active shareholders. As is standard, they state they are not aware of any other matters to be brought before the meeting. And this is a final confirmation from the CEO of the board, S Action. Alright, let's talk about what this all means for Exicure Incorporated. On the governance side, the company is clearly in a transitional phase. The shift to a controlled company status with Exicure Hytron Incorporated holding a majority stake and the CEO's close ties to that entity are significant. This can mean strong leadership and focused direction, but it also raises questions about potential conflicts of interest and whether minority shareholders will have their voices truly heard. The low director compensation and lack of equity grants for directors is a bit unusual for a biotech company and might indicate a focus on conserving cash or a different incentive structure. Financially, the reduction in net loss in 2024 is a positive sign. They are managing their expenses better. However, the sharp decline in the value of a $100 investment since 2021 paints a sobering picture of past performance. The executive compensation, especially the fixed salaries for the current leadership, and the significant amounts paid to former executives, like Paul Kang, need careful consideration, especially in light of that TSR performance. While restructuring and transition periods often involve significant payouts to departing leadership, shareholders will want to see a clear link between future compensation and improved company performance and shareholder value. The upcoming say on pay vote will be a key indicator of shareholder sentiment on this front. The company is clearly looking to move forward with its current leadership and solidify its financial footing. The question really is whether the strategic direction and the compensation structure will align to create sustainable, long-term shareholder value. What is your take on these numbers and what do they signal for Exicure? Future, drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, see you next time.